So I answer this question about 5 to 10 times per week. So we're going to talk about 5 things that you must know about VA loan assumptions today on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance. And if you stumbled across the channel, I welcome you to like, comment, and subscribe. We do talk about a lot of things regarding the economics, regarding the market, regarding housing, and how it may be affecting your home buying and home selling process. So today I want to talk about something that is high on the minds of many realtors and many of my veteran owners and veteran buyers, and that's VA loan assumptions. And I literally field this question probably about 10, 15 times per week in some variation or another about VA loan assumptions. So we're going to cover 5 things that I need you to understand about the VA loan assumption, okay? All right, let's start with number 1. Number 1, this takes time, okay? You should not expect a VA loan to be done in the 15, 21, 30 days that we're doing VA loans. You're going to be working directly with the servicer of this loan, so this is going to take some time. You should expect this to take 60 months on the low end, or it's not 60 months. You should expect this to take 60 days on the low end, potentially 3 to 4 months on the high end. Okay, so this is going to take some time, and you should not expect a quick escrow process. Number 2, you have different lender guidelines. So every lender has their own guidelines about how this is to be done. So this is not necessarily the origination of a loan. Every lender is going to have overlays. So you might have a lender who has an overlay on a DTI or debt to income ratio or something like that. So first of all, let's pause. Let's talk about what an overlay is. An overlay is simply where you can do something in the VA guidelines, but an individual lender will not allow you to do it if you have a particular situation. For example, VA loans do not have a minimum credit score. I've said this before. We go down to 500 on credit score with VA loans because we have different lenders that we could send that loan to. However, that individual lender may say, hey, your credit score is at a 640, and for a VA loan assumption, we need your credit score to be a 680 or something like that. Every lender is going to be different. So every lender has their different guidelines, which is why this is going to take a little bit of time. So just be aware of that. If you're working with Freedom Mortgage or United Wholesale Mortgage or Caliber or New Res, you might have different underwriting guidelines that are not necessarily what your pre-approval was for or something like that. Number 3, you do not have a loan officer in this process. You're taking someone like me, a team like my team who knows underwriting guidelines or knows what the VA guideline says. You're taking us out of that process. And because you're taking us out of that process, and frankly, I'll say this, you're dealing with someone who's frankly making a salary. When you come to my team for a loan, my team does not get paid until your loan closes, which means that we're kind of in a hurry to close your loan. And we're kind of motivated to close your loan. Typically, if you're working with someone directly at a lending institution, that person's on salary. They'll get to it when they get to it. They're not in a hurry. They're not working late hours. Your loan simply is not a priority for them. So this is going to, again, take a lot of time, and you're going to have a lot of back and forth. You also may be dealing with someone who does not do these types of things on a daily basis. So they might be confused about guidelines, have to get answers to things. And you have to really remember that when you're doing this loan assumption thing, you have to be patient with the process because you might be dealing with someone who might be new to VA loans or not really understand how the VA process works. Number 4, you likely need cash for this process. If you are a buyer, you need cash simply because you are assuming the loan. You are not assuming the purchase price. So let's say you're buying a home or you want to buy a home and you're You want to buy that home for $400,000, but the loan is $300,000. Well, there's a $100,000 gap in there, and that $100,000 has to come from somewhere. So that gap there has to be covered, and likely you need cash in order to cover it. There is another option, which brings us to number 5. A HELOC may be possible. And I say the HELOC may be possible because then again, it may not. This gets back to number 2, where each lender has their own guidelines. So you may be saying, hey, I'm just going to get a HELOC to cover the difference or cover part of the difference. And that may be possible, but that lender may say, no, you can assume the loan, but you have to have the cash. Or you can assume the loan, but you can't have a HELOC, or that HELOC can only be up to a certain debt to income ratio or something like that. So this can be very intricate and very complex. Okay. I close by saying these 3 things. All right. Number 1, if you're a veteran and you have cash, this actually could work. Okay. If you have time, this actually could work. But I ask this, if you're a realtor and you're promoting this on an MLS or you're recommending this to your seller, call the company that currently has the mortgage and have a conversation with them. Say, hey, how many of these have you actually done? What's your timeline for getting these done? What should I expect in your communication for getting this done? Because if you go into this process, we all want a good experience for our veteran sellers and our veteran buyers. So make sure you're asking that question. And if you're a veteran that wants to do this, make sure you're enforcing this and asking your agent when you walk into a home and they say, hey, well, you can assume this VA loan that's, sometimes at 2.25% or 2.5% or something, where normal interest rates right now, as of recording this video, are probably in the mid 6s on a VA loan or something like that. You really have an opportunity to get a good deal here and have a good opportunity. But make sure you're asking the questions to the realtor. Hey, have you actually talked to the lender or the servicer of the loan and seeing how long this is actually going to take? Because one little phone call can really help set expectations for the buyer and for the seller. That's it on VA loan assumptions. See you guys next time on Major Money Matters.